Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today, we're going to look at some recent articles that have given price predictions for the price of gold and silver. And so we're going to look at that and see what they have to say. And we're also going to pull up the charts and see what the charts have to say so that we can get an idea based on this information where the price of gold and silver is going. So I'm going to go ahead and kick the intro, and I'll see you all here in a minute.
Think, act, and prosper. You are now tuned into the Money Level Show.
All righty, everyone. We are back. We have been seeing some pretty just amazing price action in the price of gold and silver. We have seen them rise significantly. I mean, silver hit close. I think it touched over $34 an ounce. We haven't seen that price action since in the mid decade of the in the 2010s of this millennium. And then gold is just continuing to go to all-time highs, and we haven't seen it at these levels before. And so we're going to just look at some price predictions and some articles and kind of just assess, like, okay, what do we see the price of gold and silver going measured in dollars? So let's go ahead and start with that. So this first article we're going to look at is from Yahoo Finance, and this is Bank of America. Bank of America came out and said that they believe that gold is going to reach $3,000 by 2025. Okay, so this is what Bank of America says. They say it's the ultimate perceived safe haven. Bank of America released a bullish note on gold Thursday, just as the precious metal reached new record highs at 26.96 per ounce, and this was before it even blew through that price level. Gold remains the ultimate perceived safe haven asset in today's macroeconomic environment, according to Bank of America's commodity analyst Michael Widmer, amid rising concerns over U.S. fiscal policies and their potential impact on Treasury yields. Okay, so we see that obviously the fiscal policies, we're printing a lot of money. We got more money planning to be printed by both candidates, right? No candidate is planning to reduce the budget. And so these are some things that we have to think about. And so that means that Treasury yields may be lower, especially if you lock your money into a long-term Treasury asset, whether that be a 10-year or a 30-year bond, for example. You're going to get a negative return based on what the fiscal policies are showing, right? And so no one wants to lock their money in at 30 years and then only to have their money devalued because of inflation and because of the government just continuously printing money. All right. So despite nominal U.S. Treasury yields trending upwards, gold prices, as tracked by the SPDR Gold Trust (GLD), have been climbing in recent weeks, supported by various factors. Widmer explained that the key driver behind this surge is the rising inflation expectations paired with the Federal Reserve's policy shifts. So, rising inflation expectations. Many people have thought that inflation is not going to rise anymore. Inflation is staying sticky, and the Fed has pivoted. So the Fed has turned to reducing interest rates, and we will see when they start reducing their balance sheet as well. Rate cuts triggered a surge in inflation expectations, which in turn kept downward pressure on real yields, increasing gold's appeal as an inflation hedge. And so when we see that a downward pressure on real yields, the real yield is how much percentage are you making over the inflation rate. And so now, as you can see with treasuries, I mean, they're they're not going to, with the interest rates coming down, they're not going to be producing a lot more than what the inflation rate is. And that's obviously if you believe the inflation rate, the inflation numbers of the CPI and such, right? Um, accompanying the first Fed 50 basis point rate cut, inflation expectations have risen, meaning that 10-year real yields, usually the most significant gold price driver, kept declining through September. And then we see U.S. fiscal policy boosts bullish gold outlook. A key factor bolstering Bank of America's bullish stance on gold is the U.S. fiscal trajectory. Rising interest rates have significantly increased the federal government's debt servicing costs. So that means that they have to pay more interest on the debt that they accrue. So with higher interest rates, the government's having to pay out more, which is, if we look at the national debt clock, you can see the interest expense, which is on the money that we've borrowed. Triggering concerns about financial sustainability. According to government projections, the national debt is projected to reach a new record high as of a share of U.S. economy within the next 3 years. So this is as a share of U.S. economy. I believe that's the debt to GDP. That's what they're referring to. Whitmer highlighted that whoever wins the 2024 presidential election will face an unprecedented fiscal situation upon taking office. Neither Kamala Harris nor Donald Trump seem to prioritize fiscal consolidation. Let's see what else he has to say. The CRFB report details that Vice President Harris's proposed policies could increase the national debt by $3.5 trillion through 2035, while former President Trump's platform might raise it by as much as $7.5 trillion. The large and growing national debt threatens to slow economic growth, boost interest rates and payments, weaken national security, constrain policy choices, and raise the risk of eventual fiscal crisis. So they're just laying out just the facts like this. These are just objective facts. I mean, obviously, how much debt that Harris or Trump is going to add to the balance sheet and such, I mean, that's speculative. Like, you can't really, necessarily predict that, really. So, but the fact still remains that the choices that are made is going to limit the choices that we're going to be making in the future, that we can make in the future. It's going to raise the risk of a financial crisis. It's going to put national security at risk because, military is a big budget expense of the United States government and such. And so this is going to make this more favorable for gold in this type of environment. And so this is part of their prediction of $3,000 coming next year. According to Whitmer, fiscal expansion policies are gaining traction across advanced economies, contributing to gold's global appeal. The IMF estimates that new fiscal spending related to climate adaptation, the demographic shifts and rising defense costs could amount to 7 to 8% of global GDP by 2030. This massive spending will likely force governments to issue more debt. And as volatility in the bond market rises, gold will emerge as a refuge for investors, Whitmer explained. So we see that the investment into clean energy and fighting climate change, right? We have these net zero carbon emission free goals, right? That many nations have passed, and they have to stay on track with that, right? Then you got demographic shifts as well as defense costs rising. You have continuous tensions breaking out across the world. I mean, obviously Russia, Ukraine, and Israel, and started with Israel, Hamas, and now it is Iran's involved and such. And so people are going to be investing more into defense. And so that is, and we can actually look at some defense ETFs and just look at their performance because they are performing really well. But more countries across the world are investing in defense. And so they're going to keep spending, and this is going to be a good environment for gold. Um, the massive spending will likely force governments to issue more debt. That's what he said. We already read that part. Central banks are also anticipated to increase their gold holdings as a part of currency reserve diversification. The share of global central bank reserves held in gold has climbed to 10%, up from just 3% a decade ago. So central banks around the world are adding to their gold holdings as well. Bank of America sees gold reaching the $3,000 an ounce mark by the first half of 2025. The combination of macroeconomic uncertainty, rising debt levels, and central bank buying makes gold the last safe haven asset standing. So there you have it. There you have it. They laid out their argument, which there's a lot of factors in there, right? A lot of factors that we have to consider. So we're going to look at another article here. We're going to transition to just to see, is everyone in the same camp in terms of where they see gold going. All right. So this is from Market Pulse. Let's see what they have to say. It says gold prices advance further overnight, gaining acceptance above the $2,700 an ounce as global rate cut bets intensified. The killing of Hamas political bureau leader and the masterminds behind the October 7th attacks had raised expectations of an escalation in the Middle East conflict, but the precious metal was already well on its way to fresh highs. Okay, so let's see what they have to say. Where do they think it's going? A bullish take from the London Bullion Market Association, who conducted a poll recently, further adds credence to the idea that gold prices may not be done just yet. The poll was to predict the price of gold in 12 months' time, with the association seeing prices at $29.41 an ounce. So they're not too far off from Bank of America. They're saying within the next 12 months. And so Bank of America is saying within the first half of 2025, gold will hit $3,000. And so let's see what they're saying on their technical analysis. From a technical analysis standpoint, gold has been difficult to analyze with the lack of price action. So yes, so gold has been difficult to analyze because it has never been at these price levels before. It's hard to find certain patterns on charts and stuff. And so, I agree with that. Gold bears have been hoping for some headwinds from U.S. data, but that has not materialized as housing data disappointed. This has led to some USD weakness, which in theory should aid gold prices. Okay. The concern for bulls lies in the fact that the RSI is now in overbought territory, which we will look at that on the 4-hour, daily, and weekly charts. That, coupled with the potential for profit taking before the end of the day, leaves me slightly concerned. However, the threat of a retaliatory strike by Israel on Iran has strengthened as Israeli officials commented today, a strike is imminent. This is something that could limit downside ahead of the weekend and into next week as well. Immediate support rests at 2,700 before the 2685 and the 2673 handles come into focus. So this is the zone that they drew. Like, this is where they believe support is at currently with gold. Okay, so we see that they have a pretty similar price target with gold. And so I'm going to go ahead and share a chart as well and just see what I'm seeing on the charts. Feel free to comment if you want me to look at anything specific on the charts. I've been working on my technical analysis, but I'm not an expert. All right, I'm getting there though. All right, cool. So here we are. This is gold. This is on the weekly. As you can see, this was a bull flag pattern that I drew a while ago in terms of that gold was going to break out of this pattern. So as you can see, the flag, and it chopped sideways, then it broke through the flag. So gold could be making another bull flag pattern, especially if it consolidates, between wherever it goes, wherever it consolidates. So obviously this could go higher, and it could consolidate sideways before going higher again, like it did right here. As you can see, it chopped sideways within this range between 2300 and 2440. It chopped sideways between that range for a number of months, I believe. No, yeah, this was within about 3 months, and then it broke out. So I think that we could be in a similar pattern again. So we'll see what gold does on Monday. If it goes higher, obviously the flag pattern will still be intact. But if it starts to chop sideways and consolidate for a little bit, we will definitely see we could definitely see a bull flag pattern and gold break out to the upside. Now, obviously, with the news that is currently happening, technical analysis does not necessarily work whenever there is some type of news. Let's say if Iran were to attack, or Israel were to attack, again, things of that nature, right? You can see the price of gold just shoot up, right? And then technicals, they don't really even matter in that situation because it's based on some type of global event versus just psychology in the market. So I'm thinking that we could see gold definitely higher, to, between 2700 and 3000 for sure. I had given a price target of 2700 a few months ago. I think it was beginning of September. I did 2 videos in September with my price target of 2700. Gold has broken through that now, and yeah, so we'll see. We'll see what happens next. So let's go ahead and transition to silver. Let's talk about silver. I was definitely bearish on silver for a little while. I was pissing people off because I was just like, it's not doing anything. It's not doing anything. What is it doing? And it's just taking a long time. I didn't necessarily sell my silver. I've still been buying silver. I actually just bought some today again. So I continue to buy silver and continue to buy gold because I just view it as real money, right? It's real money and insurance. And so, but to see silver touch $34 an ounce and then close at 33, above 33, that was pretty shocking for me in terms of just being able to see it at those levels again. Like, we haven't seen those levels in a long time. So I'm going to go ahead and share screen and see what the other experts are saying on the silver front. So let's see when this came out. This is Investing Haven. So let's see. They put this out on October 1st, and they said that on silver confirmed this ability to touch their 2024 price target, 34.70. Silver may or may not hit $50 in 2024. This is a very high probability silver price forecast for 2024, 37.70. Silver continues to move higher in line with our silver price forecast. While our first bullish target of 34.70 was almost hit, it looks like our second target of 48 to $50 is now officially postponed to mid-2025 as per the silver chart setup of January 21st, 2024. Investing Haven's research team confirms that 34.70 is a no-brainer target in 2024. Our second bullish target is 37.70. Once both are cleared, we expect a quick rise to $48 to $50 to be hit in the period April through June 2025. There is lots of excitement on cash tag silver. Even banks turn bullish. Moreover, silver seasonality is now starting to support the silver price the coming 2 quarters. Okay, so they have a $48 to $50 price target. by middle of next year. And I mean, if gold hits 3,000, silver can definitely hit that. I mean, if gold's at an all-time high, silver can go to an all-time high for sure. So I think that silver right now is still it's still underpriced in terms of, with gold being at all-time highs and it's sitting at $33. I think that silver's still underpriced and that it could move a lot higher, especially when looking at the silver equities and such. I mean, the miners are still. I mean, they're doing a little bit better, but yeah, I mean, they could be, they could run up significantly. So let me go ahead and share this news. This was kind of interesting. I haven't really seen anything about it, so I'm kind of curious about um, where they got the information from, but maybe there's some sources in here. So this one says that Russia's central bank to acquire silver reserves. Russia's draft federal budget for the coming year includes plans for the nation's central bank to continue adding gold, platinum, and palladium reserves and acquire silver for the first time. Okay. Russia's central bank announced that its plans to purchase silver as a part of its reserves, a move that could significantly raise the price of silver in the coming months. For at least 20 years, until recently, the only precious metal that central banks held in their reserves was gold. Global central banks in total have been strong net buyers of physical gold for the past several years. As one example, Poland's central bank gold reserves now exceed those held by Great Britain. These countries are not trusting each other. They're not trusting each other for sure. Recently, Russia's central bank also started adding platinum and palladium to its reserves. Whoa, I did not know that. Okay, platinum and palladium. This is sensible, as that notion is among the world's largest producers of both metals. 2 weeks ago, Russia's Interfax reported that Russia's draft federal budget for the coming year includes plans for the state fund that nation's central bank to continue adding gold, platinum, and palladium reserves, and for the first time to acquire silver. So here's the source right here, Russia's Interfax. We may or may not go to that. It just depends. I don't even think it's, yeah, I mean, yeah, we have to translate this joint. So, yeah. Last year, Russia was the eighth largest silver producer at 38.5 million ounces. It's far less important to Russia's economy than the value of gold, platinum, and palladium industries. In that sense, it might not make sense for Russia's central bank to acquire silver. Interesting. Okay, so that's some interesting news that I was not aware of, and I just saw it today. So hopefully my screen was still working. I got a notice saying that something was acting up. But let's go and look at the chart with silver. All right. See what silver has to say for itself. All right. Let's see. Okay, here we go. Boom. All right. So I just drew out some levels. I mean, because silver's been at these prices before. So you have some zones that we can look at based on history to see, like, okay, where are we at in this process? I mean, obviously, the high for silver was 49 for almost $50 an ounce. So yeah, we're still a little ways off. All right, so as you can see here, this is just a swing low, that occurred back in 2022. There's a lot of different macro things going on, but silver had went down to $17 an ounce. I don't know if you all were accumulating then. I think I bought some then, but yeah, so this is just the low. All right, so then this is a zone that I drew based on, it's touched this zone multiple times. As you can see, when it started to break down here, it bounced back and it chopped within this zone for a little bit, and then it broke down, came back, and then this was resistance, but it broke through that resistance, went up above it, came back, started to break down like like a false breakout, and then broke above it again, hit this zone, got rejected, came back, hit this zone again, and it just chopped within these two zones for a number of months. This was between $21 and $26. So came back, touched it, kept touching this zone, came up, rejection, touched this zone again. So this is a support level, $21. Hopefully it does not go back to that level, but it's definitely a support level. I mean, and if I were to drag this even back, I mean, you could see that it touched it even over here, right? So it's touched this zone multiple times. So this is like a psychological level. Obviously, it broke through this $26 level, and then it reached this zone here, and this $26 level goes back. Like, I mean, you can see here, this was support and resistance, quite a bit. I mean, then it goes back all the way to even in 2010, right? Here, it served as some resistance and support, bounced up, came back, touched it again, support, bounced, shot straight up, right? And it didn't touch back here until 2011. And then later in 2011, it bounced here again. And then in 2012, this served as support again, went up, and then it broke through that support. And so this $26 level, I mean, this was pretty much a level that has been touched quite a bit. So it broke through that. Then it hit this level, $29. As you can see, it tried to break through this back in 2020. It rose up, got rejected, went down, came back, got rejected again, right? And then as you can see, when we get here, it did get rejected. Went to $29, got rejected back to 26. The support, bounced off support, broke through, stayed above it for a while, then broke down through it, touched support again, then chopped a little bit sideways into this $28 to $29 level, and then it broke through. And now we're at this level. So this is the 33 64 to I think it's about $35. And the test is here to see if it even breaks through this level. So if it breaks through this level, I mean, you go back, right? And you can see here from 2010 to 2011, this served as support and resistance. So as you can see, silver shot straight up to over $50, came down, hit this support in this range, and then bounced up, came back, hit support again, bounced up, came back, broke through support. Then it served as resistance, right? Bounced down, hit support, resistance again, bounced down, hit support, resistance again, right? Bounced down, resistance again. And then as you can see, I mean, we haven't hit this level ever since. So this is like the major test coming up for silver to see if it breaks through this 33.53 or somewhere around there to $35 level. So that's the next test for silver. Obviously, if the price target of $48.50 next year, it's going to break through that, and it's going to be at the final boss test here to see if it goes higher. But right now, let's focus on this and see if we get through that. So that's the outlook for silver and gold so far. I hope this is helpful for you all and understanding what the technicals are looking like. Let's see. Art Best 2 said electronics need silver. Yes, they do. I mean, we do have the industrial demand that is, still pretty strong for silver as well. So obviously, these are needed. I mean, solar panels, all those things, electric vehicles. So silver is definitely a necessary commodity. It usually lags behind gold, right? Gold's hitting all-time highs, silver lags behind it. But to see silver at $34, hit $34, I mean, that for me was like, okay, this is good. Like, it's actually looking like this is happening, because we haven't seen $34 silver since the 2010s to 2011s. And so, yeah, so hopefully these equities just soar significantly. All right, that's what I'm waiting on. I'm actually going to give y'all a stock that I've been buying. I mean, there's a lot of different silver stocks. Some of you may have your own equities that you're buying. Obviously, one that I've been buying lately is First Majestic. First Majestic, I mean, it hit $4 right now, sitting at $7. And I mean, in 2020, when you had this silver squeeze, right, First Majestic was at $24. And then, as you can see, back in 2011, I mean, it was at $26, $27. So, I mean, this will still have some room to run, right? And so that's what I've been accumulating lately. Obviously, you got stocks like Vizsla Silver. Let's see what Vizsla's doing. All right, so Vizsla's sitting at $2.24. I mean, this is a newer company. I mean, it went up to $3 at one point, close to $3. But yeah, sitting at $2.20. And so I've been, acquiring Vizsla throughout this range here. So yeah. So I mean, those are some silver equities you could look at if you're interested in buying silver stocks. This isn't financial advice, but that's just what I've been doing. So just want to share that with you all. Thank you all for joining today. Got some more interviews coming up next week. Looking forward to just staying active with you all as we continue to grow and become more savvy with our finances as we think, act, and prosper. So you all take care. I got to get to the fam and everything. So y'all have a blessed night. And all right, y'all. Peace.